narrative is right now, where we're going with the story, what the Fed is doing, what the Fed is thinking, how we can possibly get to a point where we can understand what the path of interest rates is possibly going to be, because that's going to determine what these risk assets do and what gold does on a short to medium term outlook. You feel me? So that's on the agenda today, that's on the back burner. We'll also look at what the Fed watch tool is saying in terms of probability. What are we looking at as far as the path of interest rates are concerned? Are we looking at pricing in um, 25 basis points for September? Are we looking at pricing in 50 basis points for September? Because that's a possibility. I mean, if you look at what the Fed did last year, all right, when they began on the cutting regime, I think we got our first cut last year in September, and we got a massive 50. All right, let's check actually. Let's check. All right, let's look at what. All right, Fed interest rate. All right, let's check this out and see where the federal fund rates has been. All right. So what we're going to do is we're going to compare what the Fed did when they began cutting rates last year. All right. Coming out of COVID, coming out of that restrictive monetary policy stance. When we got that first cut, we need to see how they behaved in the past to see how they could possibly behave in the future. Shout out Dylan on Instagram. Join us on the live stream, bro. Hit the link in my story. All right, guys, hit the link in my story, and yeah, join us on this journey. So let's check what the Fed did. All right, we're looking at 2024 September. All right, the interest rate back then was sitting at 5.5%. That's a 21-year high. They cut by a massive 50 basis points. What do you guys think about the potential of getting that same supersized 50, whereas the market is pricing in at 25, right? Because if you look at the Fed watch tool right now, if we look at the Fed watch tool right now, it'll be interesting to see that we're only pricing in to a large extent by a 90% probability the fact that we could potentially get a 25er instead of a 50. But ladies and gentlemen, I believe that if we continue to see weakening labor data, if we continue to see weakening initial jobless claims later on this week, it continues to push the narrative that we could potentially get an even bigger interest rate cut in September. And that, my friends, is the bullish base case scenario that I potentially want us to explore tonight. What do you guys think of that? It's quite the segue, yeah? That's quite the way to start the stream. So let me know, guys. What do you think? What do you think? All right. So before I get into anything chart related, I just wanted to lay out the narrative so we can currently see where we're coming from, right? We're coming from an environment where the last FOMC, which was okay, so let me just back up here. Let me just back up, chat. FOMC on Wednesday. If we look at Jerome Powell's statement, all right, let me try and see if I can find that here. All right, let's fact check him real quick. Jerome Powell, recent FOMC statement. Let's check it. Let's fact check Jerome Powell in real time and see what we can find. All right. Because this nigga was so confident last week. All right. So confident that the labor market is strong. You feel me? This man was so confident that the labor market is strong. So let's fact check him and check. All right. 6 days ago. Here we go. FOMC statement. Um, I wish we could have like a bingo card, guys. Dang. Let's see. Let's see here. I want to play an interesting exercise here. All right. Too late, pal. Do you guys know what Donald Trump calls Jerome Powell. Too late, Jerome. Too late, Powell. Hit me with some W's in the chat if you know that. All right. So let's see. Before we even read the statement, we're gonna play bingo. We're gonna play a nice little game here, guys. Uh, this is gonna be nice. This is gonna be nice. This is gonna be nice. All right. Bear with me here. So, I'm thinking, uh, we're gonna say data dependent. All right. Data dependent. That's number one. I think you might say something. He's definitely gonna say, something about the labor market being strong. Definitely. What else? Any suggestions, guys? Let's play this game together. Any suggestions? What do you think we're going to find in that statement? Actually, what I want us to do is actually play him live on YouTube. All right. We've got time today. All right. So, what do you guys think? What else can I add here? Okay. The labor market is strong. Tariff uncertainty. Yep. Um, Fed is apolitical because of the pressure mounting from Donald Trump. All right. I think that also could be something we might find in that statement. We could find mm, let's see what else. Labor market is tight. Yes, we've got that. I don't think you would have said inflation is transitory. Hmm, maybe actually. Yeah, because that would give them a reason to keep interest rates higher for longer. All right. What else? We need one, two, three, four more, guys. Give me four more things you think Jerome Powell said last week if we look at his statement. All right. Retrospectively, of course. All right. What else can we add there? Let's say hmm, 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 hmm. Um slowing growth in the economy. Yeah, we've seen those GDP figures. What else? September off the cards. What else? Hmm. Let's leave those. All right. Let's leave these. I think this is enough. I think that's enough. All right. No, man. Anyway, we'll just mark that off. All right. Retrospectively, let's look for Jerome Powell here. Jerome Powell, FOMC statement. You guys can see my screen, yeah, chat? You can follow along. We all good? All right, let me know, chat. Everybody on Instagram, join the conversation in the using the link in my story, yeah? Now let's check out what too late Jerome Powell said last week. That's too long. 45 minutes is way too long. Maybe we could browse through it. No. All right. So here's the statement. Effect data, recent indication, growth economic activity, moderate in the first half of the year. Unemployment rate remains low. Boom. There's one. There's one right out of the bat. We've got labor market. Bingo when it comes to that one. All right. We can cross labor market off. We can cross labor market off, guys. We've got slow in growth. Labor market is strong. That one right there. Bingo. We got it. We got it. That's number one. All right. Let's move on to the next one. Let's keep reading. All right. Labor market conditions remain solid. This nigga, right out the gate in the first damn paragraph, proves me right. All right. Inflation remains somewhat elevated. All right. Sticky inflation. Okay. 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 September of quarter. Transitory inflation. He said sticky. Okay. The committee seeks to achieve maximum employment and inflation at the rate of 2%. Yeah. Over the long run, uncertainty about economic outlook remains elevated. Hmm. You see what he's doing there? He's telling us exactly he's not giving a bearish side scenario for the dollar, and he's not giving a bullish side scenario for the dollar either. He's basically threading the needle in as far as his language is. So we've got that growth uncertainty. That's number two. Growth uncertainty. Bob's your uncle. All right. We're just going to read the few paragraphs here, not everything. Committee is attentive to both sides of the risks of this dual mandate. Yeah. Remember, guys, the Fed has two mandates: keeping inflation at acceptable levels, as well as making sure that they are providing maximum conditions for labor. All right. Everybody on Instagram, guys, join us on Zoom. We're live streaming right now. If you want to see my screen, then click on the link in the story. All right. In support of this goal and target range. All right. They kept interest rates unchanged. Yes. Timing adjustments to target range, federal funds rate, incoming data. The committee will carefully assess incoming data. Chat, what do you guys think? I'm calling it data dependent. There we go. Here's another one. Data dependent. We got it. We got it. So we got that one. We got the labor market. We got slowing growth, tariff uncertainty. Guys, if we had to read that whole thing, I'm sure we'd cross off all these things. But for the sake of time, we're not going to do that. I just wanted to um, kind of bring my point across that what we're seeing, and as far as Jerome Powell is concerned, is a Fed before the data came out on Friday, before we got Friday's NFP. This was Jerome Powell's stance. His stance was that the labor market is proper, all right? Jobs are being added into the economy. And if you look at the past 3 or 4 NFPs, well, before we got those revisions, the labor market indeed and the data was saying that there's nothing wrong in as far as the labor market, all right? Come Friday, we see that big drop in jobs, which on its own is alarming, if you ask me. But what's worse, guys, are the revisions that were made to the jobs numbers. All right. Now let's have a look at that because that is what sets everything ablaze. All right. The reason why gold was selling off, the reason why emerging currencies were under pressure, the reason why the dollar was bid in the past week before NFP is because of the view that the US economy was in good shape. All right. The tariff uncertainty was also kind of leaning its way into the dollar. I mean, if you look at all these tariff deals, they're all asymmetrically in favor of the US dollar. Against all these other currencies, they're asymmetrically benefiting the US dollar. So that US exceptionalism theme was the one that was underpinning dollar strength. And now, when you look at this data that we got on Friday, guys, we're expecting 106,000 jobs to be added into the economy. We got 73, guys. All right. That is the worst figure since the pandemic. All right. Not this one, but the revisions that were made to the previous month. All right. So July's NFP, guys, came in at 147. All right. The previous NFP came in at 147. But after it was revised, we saw an error in the data, and this is the true amount of jobs that were added in the US economy: 14,000 as opposed to 147,000. Now, chat, I don't know about you, but that is a huge drop. That is pandemic levels of NFP data. All right. If you look at the unemployment as well, the unemployment rate as well, it's ticking up, is sending alarm bells to the Fed. Now we've got this weakening labor market, and that is the catalyst, or rather, the fuse that basically lit the fire, ladies and gentlemen, when it came to what we saw on Friday. I don't know if you guys were trading gold, but if you were trading gold, then you saw that explosion from that buy side setup, and that was driven by the data that I'm talking about right now. All right, now let's get into something I want to share with you guys as we prepare for the week. I just want to break down what we need to be looking at in as far as the economic data and what we can prep for. Now, the dollar was steady going into Friday's data. However, since the data came out, we saw bond yields falling on the prospect of lower interest rates going forward. Now, all of this was priced in. The dollar was poised to weaken eventually. However, it's the fact that the labor market concerns are what basically shift the narrative completely now, right? Now, as it stands, guys, before the data, we were sitting at like a 60% probability that we could get our first interest rate cut in 2025 in September, which is what markets are hoping for in order to be buying Nasdaq, buying the dip on S&P 5, buying the dip on Dow Jones, buying gold. All right. The whole trajectory of the US dollar was set to go lower. And that's why we've been on the buyer's side of these are the riskier assets in the safe haven and as far as gold is concerned. But right now, that was slightly beginning to be priced out because of the positive economic data, the fact that we had higher jobs, and it gave the Fed no scope to cut rates. You follow me? Now, where we are right now, that whole thing has changed, guys. We went from 60% and we're now at a whopping 92%. And as far as the rate cut odds of getting our first interest rate cut in September, all right? And if I'm going to throw a spanner in the works here, I'll even go in as far as to say that I think we could get a full 0.5% interest rate cut in September. And if that happens, good God, it's going to be explosion on risk assets. We're going to be bullish on gold. We're going to be bullish on Nasdaq. We're going to be bullish on Dow Jones. And that actually sets up for the kind of year we ended in 2024 when we had that bull run on the equities. Now, just to continue, the things that we're looking at, guys, jobs data, all right, let's unpack what actually happened, all right? We're seeing some cracks definitely appearing. Last week, Friday's US jobs report wasn't just soft, all right? It was deeply fractured. We saw cracks in the labor market, and those have now become huge crevices, and they're warranting attention from the Fed. That's what we're seeing right now. Now, if you guys dial your minds back to the FOMC last week, we saw two dissenting votes from the committee. Yeah. So there's 9 members on the Fed, and they all get a vote on how to whether to change the interest rate or to keep it unchanged. Now, usually they're always voting in line with one another. All right. But for the first time since the late 90s, there was two dissenting voices in favor of a cut. And they have been since validated by the latest round of economic data that we've just seen now, guys. We're seeing non-farm payrolls missing expectations. We're seeing huge downward revisions, guys, that have led to the firing of the leader of the BLS. The governor of the Bureau of Labor Statistics has just been fired, guys, over the past weekend because of this miss in the data. All right. Now, we saw that NFP payroll data miss expectations. We're seeing a slowing in job growth. We're seeing a slowing in wage growth as well, and the unemployment rate also edged up. So this, ladies and gentlemen, is the perfect storm that gives us that buy side opportunity that we're potentially looking for on gold, and it's going to be evidenced when Simon does our technical analysis and sets us up for the trading opportunities and the trading ideas that we have intraday, as well as our short to medium view on gold. All right. Now, to end off this section with the jobs data, we're seeing that this combination of weakness is what's fueling that increased speculation that the Fed's patience is definitely running out, even if it does have patience. But the mounting pressure, firstly from the political front, secondly from the data front now, is really caving in. And I think Jerome has no option but to cut rates ASAP. What do you guys think in the chat? Chat, what do you guys think? Now, let's talk about the Fed, guys. All right. Their dilemma right now is to cut or not to cut. All right. The Fed watch tool, as we saw, is giving us a probability of around about 92% when it comes to cutting rates. In September, I think we're going to get a 50 basis point decrease. That's up around 63% from just a week ago, guys. Now, and the trusted Goldman Sachs analysts there are now betting that we might possibly get 3 consecutive interest rate cuts. So September FOMC, maybe we might get a 50 basis point. October skip, November, maybe we get a 25, December we get a 25 or a 50. That's what I think might happen. And all of that is dependent on how bad the labor market is going to crack. If we see signs of the labor market cracking, it's going to increase the likelihood of getting these interest rate cuts. And that is what's going to line up perfectly with the buy side setups that we have on these charts with a weakening dollar. That just needs us then to just pair it with healthy technical analysis. All right. That needs us to look at the bullish continuation patterns, the bullish reversal patterns. All right. And to look at the continuations and the trend that then begins to evolve henceforth. All right. Now, we saw that the reasons why the Fed is under pressure, guys. Again, jobs data is crumbling, inflation is still sitting sticky above that 2% target and is still set to rise because these tariffs that are being introduced, guys, remember, they're inflationary in nature. Yeah, they're inflationary in nature. The cost of goods is going to be more expensive. I don't know if you guys were listening to Mr. Ronald Lamola. That's our Minister of Trade, I believe, if I'm not mistaken. Let me just see. I don't like to wing these kind of things. All right, let's fact check that in real life. Let's see. Let's fact check that right now. Let's see. Let's see. Let's see. Let's see. Am I right, Chet? Ronald Lamola. I spelled his name wrong. Damn. Yeah, yeah. Minister of International Relations and Cooperation. All right. This nigga right here was speaking this week, and he basically was reiterating and commenting on the tariffs taking effect on South African exports. 30% on our exports, all right, guys? So that's going to make the final product more expensive. Americans who are buying apples are going to have to pay 30% more once they land in the US, guys, all right? So you're seeing that these tariffs are still going to have evidence in the real economy. We're still going to see the impact of these tariffs, all right? And inflation is still going to continue to be sticky. Now, I ask you, or I put to you, if inflation remains sticky, you would expect interest rates to remain elevated to bring down the inflation. However, if the Fed has to pick between saving the labor market or bringing down inflation, the labor market will always win, guys. All right. The jobs numbers, the initial jobless claims that we're going to get this week, the next NFP, they are absolutely mission critical. The higher the initial jobless claims this week, gold is going to keep buying. GBP USD is going to keep buying. Euro USD is going to keep buying. All right. Pending the disparities between obviously the macro data that keeps coming out. I'm talking about the short to the medium trend, right? We're going to see dollar weakness. So I'm going to break it down in to make this easy for you guys. Bad news for the US dollar right now is going to be good news for every other pair. Okay, so bad news for the dollar. If we get higher initial jobless claims, a pair like USD CAD is going to sell. All right. You need to understand. That's why I started where I started, guys. I don't know if you're following me, but that's where I started with the story and where we are in the narrative so you can understand what this data means. If we get a weak retail sales print that comes up right now, it's going to show the Fed that the jobs that have been lost are showing up in the receipts in the stores. The stores are making less money. If the stores are making less money, they're less likely to hire more employees. All right. So it's gonna snowball. We're gonna see slower jobs, slower spending, slower GDP, higher initial jobless claims, lower NFP, higher unemployment rate. That's how the data is gonna keep rolling, ladies and gentlemen. All right. Again, I repeat, we're gonna see lower NFP, we're gonna see lower retail sales. That'll translate into higher initial jobless claims, lower GDP. All right. You need to see how the dominoes are gonna fall here. Hence, I'm saying to you, this week's initial jobless claims, ladies and gentlemen, is going to be the fuse that could potentially light the fire under these risk assets. I don't know. Chat, what do you think about that? Hit me with some W's in the chat. Instagram, if you are here, join the link and follow on my screen in my story because we're cooking here. Chat, what you guys think? 92% chance of an interest rate cut in September, and I still say 50 basis points. Lubanzi says, best explanation. Shout out to you. W's in the chat. I feel you. I feel you. I feel you. All right. Now let's proceed and get to what you're all waiting for, the meat and potatoes, right? Everybody's section is the technical analysis. Once Simon comes on board and does a technical analysis, that's where everybody pays attention. But this is the stuff, this is the part that gives the technical analysis meaning and context. We're not just pressing buttons for the sake of pressing buttons. You feel me? We're pressing buttons based off of solid reasons. Solid reasons. All right. Now, jobs data crumbled, inflation is still sticky, and also we need to understand, will the tariffs increase inflation and slow down growth? All the signs, in my view, the path of least resistance points towards more bad news incoming, unfortunately for the US economy. I don't see any good news in the interim. And if we do, it might just be a flash in the pan. I think that the fuse has already been lit. We're going to see the cumulative impact of these tariffs in the real economy in the next 2 to 3 months. All right. Now, gold, guys, the fact that we saw confidence in the US labor market fading, that made gold reignite its status as the go-to safe haven. All right. Especially with the pressure that we're seeing right now for the Fed to cut interest rates from that weakening US data. Now, rate cut expectations do weaken the dollar, guys. You know how this works, all right? Lower bond yields, they also boost um, gold. It makes it more attractive to have, all right? So think of it this way. Interest rates are like gravity. When they go down, gold goes up. When they go up, gold goes down. All right. So our job right now, over the next couple of days, over the next several weeks, guys, in the group, we will be talking about the data that comes out. Now that I've laid out the backdrop, now what we're going to do, we're going to go back to the group during the course of the week, during the course of the days, the coming weeks, and we're going to break down every piece of data as it comes. Now that we know where we are and what we're looking for, we know what this information means and how to take action with it, more importantly. All right? Because anybody can read a damn economic calendar, guys. Anybody can read an economic calendar. It's what does that information mean ultimately, and how do we take action from it? What will the Fed think about this information? All right. Everybody can read an economic calendar. But what I'm explaining to you right now, guys, you can't buy it off the shelf at Checkers. It takes experience, this one. I need to fuck around a little and find out. That's the only way. You can't buy it. You can't buy it, ladies and gentlemen. You can't buy it. I shit you not. All right. Now, the bottom line here, guys, gold still has room to hit that 3,500 level again, should the data incoming keep getting worse. Now, lastly, we'll talk about tariffs, guys. Risk sentiment is rising. The tariff deadline was on Friday, all right? And henceforth, I think they go live on the 7th. I think customs and the ports, they need a few days from the deadline to implement all these things. So that is also gonna propel gold and make it more appealing, because in these times of uncertainty, guys, nobody knows when deals are incoming. We don't know how fast these deals are happening. We don't know whether they'll be happening. We don't know whether they're going to keep escalating or not. All right. If we get escalations in these deals or the lack of deals, then I think that we might see exuberance again and some demand come into gold and further validate that setup that I'm looking at right now and that Simon and I are looking at. All right. Now, we also, how can I put this? The only thing that can make the dollar rebound again, ladies and gentlemen, for it is a rebounding labor market. All right. If the next NFP comes back and surprises, then this current one might just be considered a flash in the pan. All right. If we get strong bouts of economic data, then I think again, then that puts the dollar back on the front foot again. If we get a spike in inflation, and a strong labor market again, then I think that that keeps the dollar back kind of into play. All right. Now, before I hand over to Simon, I just want to have a look at the US dollar index with you guys, and then we can see what we're making of that currently. Just hang tight for me. There we go. We're looking at my brood over here. All right, let's look at the US dollar index. And as far as gold is concerned, this is the general outlook, ladies and gentlemen. We are still bullish on gold. Simon will more or less break this down more in detail and give you the intraday plans that we have and the intraday opportunities that we potentially see. Keyword being potentially, guys. Remember, everybody's allowed to do their own thing. This is for you to basically see what we're doing, understand the data, and so we can share ideas, so we can basically formulate a clear plan for the week the catalysts for the fundamentals, how we can merge that with the technicals, and then formulate trading ideas from those. All right. The rest is on you, whether you take those opportunities or not. But I assume you're going to take them, which is why you're here. All right. Generally, we've been getting higher highs and higher lows. We're still basically bullish when it comes to the US dollar. We've got this bullish continuation pattern over there, flatlining into this potential bullish continuation pattern. This is one potential big giant bull flag. All right. Culminating in that longer term trend that's still holding. Remember, guys, this is not just a line, it's a zone. Okay. So what we're seeing there, it's a zone. It's a zone. It's not just about this line that I've got here, right? It's a zone. So once we saw the price action moving up there, we saw that there's still demand for gold around these 3,200 levels. And this is why I believe that there's still room for us to revisit these 3,500 levels. The structure is still largely bullish. However, I digress. My colleague Simon, um, who will break down the technical analysis for you guys, is gonna elaborate further on this in a way that is very, very artistic. So Simon, are you there, bro? Let me not divulge too much and leave this to him so he can cook. Big
I'm
Sam, are
here,
you
bro.
there? All right, let me give you the reins and you can dollar what you must. All right, chat. Let me know, guys. What do you think of that? W's in the chat. What do you guys think of that overall overview in as far as the fundamental story is concerned? I think it's fair. All right, pattern forex. There we go. Make host. Let's go. All right, let's do it, Big Sam. She's all yours. Simon, I think you're muted, bro, or you haven't spoken yet.
Oh, okay, I see.
Shout out. Yeah, yeah. Let's go. Let's start
Sorry,
that over,
sorry.
bro. Run that back for us.
All right. Yeah, I cleared everything up so that we can look at the structure, right? Like you said, the line here is what we call a zone line. But now I want the focus to be on this consolidation here because we do see that clearly this is a higher low and this is a higher high, right? And we predict this is the higher low, right? And then looking at this high and this high, this one is lower and this one is also lower than this one. And looking at these two equal lows, they are a bit higher than this one. So you can see this thing, um, let's see, it's cramping in. I wanna do this. I wanna do this. I don't know if this makes sense to a lot of people. It's just pointing out the structure.
Oh, absolutely. It's a
You
nice
don't, you
bullish continuation pattern. Yeah,
mm-hmm.
a
So you
massive
don't have
one.
to be looking at this line and say, oh, this line is broken. No, and then it's going up. No, no. Look at the structure.
The entire.
Always
Mm.
remember, you must always look at the back, must look back of the price action, and then you find the history. This is the previous high, and this is the previous low. This is the higher
Mm.
high, this is the higher low. And then you're looking at this low and this low and this low. You see this one? Sorry, let me just delete that. This low here, it's not even lower than this one. That means it's busy cramping in, right? It's doing something like this. Yeah. So don't go technically be like, no, but this high here, it's broken, but then you see it hasn't broken the high. It broke the trend line, yes, but the trend line, we're not trading the trend line here. We're trading structure. These lines are just helping
Absolutely.
to map out the structure that we're looking at.
Mhm.
We are focused most on the highs and the lows, yeah. So as we can see, this is a pattern that looks like this. It's a continuation pattern on a daily time frame, yeah. So we are looking at if we're measuring this high and then putting it here. We are saying if this thing breaks out, we're looking at this price here, 3,900, close
Four
to
thousand
four.
dollars for gold, guys. Holy shit.
Right. Yeah. So
That's a
remember,
big statement. That's a big statement.
bruh, yeah. It was a big statement when we were looking at this one. Remember, we had this consolidation here. Let me just slowly draw it here. We had this one here, this consolidation, and
Mhm.
then we this movement right here.
Mm.
And we said if this thing breaks out, it's gonna go to these levels here. We
Mm.
were looking at around 2,800 and we're saying, yo, that's a lot, right? And then we got to 2,700 though, yeah. 2,700. And then it went higher, right? So don't be shocked when we get to 4,000 something and the gold just keeps on pushing up, right? Uh, that's what technically saying on a daily time frame. It's been saying that for a long time, yeah. So looking at these past experiences here with gold, we can see when we use these projections to project higher, as long as the highs are broken and the lows are protected, we are still gonna keep projecting higher highs, right? So now I hope everybody's aware that we are trading within a consolidation. Yeah. Yes, we are getting news that it's going, the dollar is strengthening, it's weakening, it's strengthening, but we are still in a consolidation. Yeah. I hope everybody's aware of that. Yeah. So, and for our small time frames, yeah, we had this breakout here. This was also a result of dollar weakening, yeah, like Offense said there. And we are looking at higher highs and higher lows still on this. Now, again, we studied the structure, yeah. We had the lower lows here, and then we broke this lower high, getting to. Sorry, guys, I'm catching flu. Ne? So don't mind my clearing of throat there. So we are getting these highs, and then we see this is the lower low. I mean higher low, and this is the higher high. So I would say, um, for a better price is to get to these lows here. Even though we are marking these things here, I can make an example that let's say we break this one here, yeah, and then we start going down like this. And then when we get to these levels, we look for a pattern again to start rising with this. Then we know this is a fair price because right now it has a lot of injustice here, right? You can see that's fair value gap there. So at this point, this is only when we are looking for a better price. But nevertheless, we can have these prices here. Remember, this is also a structure. We can go to 1 hour. When you get to 1 hour, we see that we had a lower high and higher low. And then we had a higher high, a small pullback, a higher low, a higher high. And look carefully, it did not break below this previous low. Then now we are at the higher highs. So if we're looking for a move within this movement, we can look for a minor higher low and then get the higher high. Knowing that we are still within a daily consolidation, which is busy cramping. Remember, right? It's busy compressing. Yeah. So if you're looking at this and going to date, remember this line here. is structuring out the daily consolidation, yeah. That's why I am putting it here, my projections to be not beyond this consolidation as of yet. Yeah. It will be up to you if you're holding in a risk of this thing is going to break out, or you are risking that you're gonna be stopped out on break even if you're smart. If not, then you're just gonna give money back to the market. So be careful on that, yeah. So now here is the plan. Knowing that we are looking at let me just do this and clear. We are looking at this move here. Let's say we are looking at this previous low, and just to measure the structure, yeah. Just to measure the structure, we're just gonna do this. Yeah. And be like, okay, we can extend to these levels and then come back down to get a new higher low to for us to buy. And we previously had this view. Okay, let me just quickly do this. We had this view here while the market was still around these highs, was still around here. We said this could break out and then come and retest either this level or this level, yeah. But then as you can see, it went here respecting this previous um higher low before making this higher high. So now we are slightly above this high, making this a new higher high. So we can be looking at these levels when we go to 5 minutes. As you can see here, um, the levels that we're looking at is these ones here.
Hmm. Hmm.
That's that's our 1 hour higher low. Yeah. So looking at these structures here, we have um important thing, guys. Important thing is let me just I know a lot of people know this, but it's always best to keep things basic. We have lower low, lower high, lower low, lower high, lower low, and then having equal highs, and then having a higher low. And
Hmm.
now we have some sort of a head and shoulder, some sort of reversal going on here. And then the market started shifting bullish here. So now we have higher high, higher low, higher high, higher low, right? And then now we have higher high. And now we broke that. What are we expecting technically if we're
Yeah.
keeping basic?
W's in the chat, guys. W's in the chat. What are you saying? Guys, come on.
You
Come
see?
on.
So we're like expecting a higher,
Dang.
a lower low going to these levels here on 1 hour to get that pullback, yeah? So
Now
now,
chill out. You're cooking way too much. Like, whoa, 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 whoa. Chill out, bro. Chill out. Nah, nah, nah. You're doing too much.
nah, chill, bro. Let me just feed our brothers and sisters here, man.
Let's go.
So looking at this, I think we have a pattern similar to this on USD Swiss franc on a bigger time frame. We are expecting something like this.
Uh-huh.
Like, sorry, my drawing is bad, but you'll have to forgive me, guys. I've been drawing all these things for a while now. So in order for us to get a move back up, expect some sort of a reversal. You don't expect the market will just make a V and then obviously it will do that, but the structure will be there, but it will be less visible if there's like news impact or something like, but it's always there, right? You can backtest this on your own and then you'll find the truth. The market will tell you everything you need to know. So right now we have this kind of projections on a 5 minute, looking at the 1 hour pullback. Yeah. And then when we get that 1 hour pullback, looking at the structure, right? And since we did this, let me just pull back the new structure. Maybe looking at something of this nature, and then look to buy to create another higher high. Ne? And then be careful of this line here, the
Hmm.
daily consolidation.
Key
Yeah.
resistance area.
Yeah. So we might be having some sort of reaction here to go further down again. And remember, always keep the daily bias in mind. It's very important to make money in the long run. Here we're just making peanuts, guys, in here. Yes, we are
For
surviving.
sure. It's a
We are
boxing match in there.
surviving to buy bread and put milk on the table. But here is the one that's gonna get you some visible stuff, right? So always keep in mind, always do your top-down analysis. Don't just, yeah, yeah, everybody knows what I'm saying. Yeah, but yeah, sure.
Bro, that was
So,
beautiful. Thanks.
so quickly, this is the plan. It's not foolproof, guys. The market can change whenever, but technically speaking, we are looking at some good structures to trade off and areas of value to take our trades. Ne? So quickly, let me just hit you with this one here. It's USD Swiss franc.
Weakening dollar,
Um,
guys. Weakening dollar, guys. Notice how Simon, if I can just cut in just for a moment, guys. Notice how the technicals are lining up spectacularly with the fundamentals. Like we can't make this shit up. We cannot make this shit
mhm,
up. The dollar is on a path towards weakening, all right, and it's clearly
mhm.
evidenced by the pairs that we see against EMs, against DMs. EM is emerging currencies. DMs are developing markets, all right? So you're seeing that trend of dollar exceptionalism leaving the chat. Simon, she's all yours.
Away, away. So basically here, we had this huge consolidation going on here, ne? And you can see that we had a strong impulse, even though it's not strong looking in this time frame, but it is strong. Let me just do this to show you how strong it is. Uh, see, it is a strong impulse and a consolidation. Now looking at the next impulse that we are currently in is also about to be kind of strong, you see. So looking at this time frame here now, um, keeping things simple again, keeping things very simple. As we can see here, from this low to these highs here, we're busy making higher highs and higher lows, highs and higher lows, and then shifting structure in here and then not breaking the highs. Now we're breaking the lows, making lower lows. And then you see this impulse and this did not break that previous high, yeah? Sorry. And now we are below this previous low. And looking within this one again, we have like an intra trend inside here. And this one has an easy structure. Let me just do this to highlight it out. We have this easy structure. We have low, lower high, lower low, lower high, lower low, lower high, lower low. So we are concerned about this high. You see,
Mhm.
yes, it's strong here. Ne? So this high, yes, it went high, ne? But then it never created a lower low. This lower high never created a lower low below this. So it does not count as a a strong lower high. It will become strong if now something was breaking this high here. So we are concerned about this one. So now we are making a good visible lower high. Yeah. And it's always cheaper to find. Here's a fib. You see, if it's around 618 and 78.6, like in this zone here, let me just put this one aside. Then we can predict, okay, this is probably the good area. Remember, area of value is very important. An area where yeah, lower high can possibly or probably form and then head down. Yeah. Now, looking at this, we tapped this area of supply on this time frame, and we're still projecting to go down. As we have been since January, guys, we've been looking at this move since January. Now, looking at 4 hour, that pattern that we have on after tapping this, is it 2 weeks back when we were looking at a
Yeah, 2 weeks
spike like
back.
this too? Yeah, when
Yeah.
we're looking at these, we were hunting for this pattern, but we didn't get it. And we had like a double top instead of this spike and then break below. Yeah. We had just a double top and then we broke below the structure. Which this is my favorite pattern. The
Hmm.
spike, the one that stops people out and then or gets people to buy in into this
Yeah.
area because now they're looking at and then stop them out instantly and then form a pattern or some sort of a pullback. So now we're having this similar pattern on 5 minute on gold, and
Hmm.
now we have it on
Hmm.
4 hour, right? One of my favorite patterns now. So looking at this now, we have a higher high, a higher low, a higher high, a higher low, a higher high, and a break below, making a lower low, and looking at a lower high, possibly looking for a lower low. And like I said, it's always best to get these areas. So this one, as you can see, it tapped the 618. I'm not sure if everybody can see it. I know I make it so light so that it does not um interfere with my vision. I don't want everything to cluster here. So it tapped the 618. So it is a good area of value because it's also testing the neckline. So anywhere between here and here and here is a good place to form a lower high, right? So it's a good pullback area. So now since we broke out of this, we must also look at what structure. We're gonna keep it simple again. Um, Looking at this structure, we have broken below, and this looks like a bear flag. Even for a newbie, this looks like a bear flag. And we are looking at higher high, higher low, higher high, and then we are at the equal lows here, right? Just by looking at it. So we can say, or if you are one of those people who trade really base really, this is really base really, and then it got stopped here. It got broken below here. But it's always best to keep something that makes sense structurally. Because this looks like it's in the middle of an impulse, right? So looking at this to break below again can, but we have a good confirmation that we are heading down here. So it will be based on your trading style here, whether you enter uh, on the pullback of this leg, because it's not advisable to enter inside a leg like this. It's always better to enter um inside a consolidation to make a lower low, let's say something like this. sometime. What am I doing here? Something like this and then sell off. Yeah. Hope that makes sense. So now looking at this right here, you can see here on a 5 minute, if we keep things simple, the structure here is broken. So we are still in a uh, bearish side here, né? So it's always best, always best to wait for a good pullback and then sell, right? I hope I didn't make everybody sleep by mansplaining this thing.
No, shout out to you, Simon, guys.
Right,
Guys, can we get
right.
some W's in the chat for Simon? Yo, that was fire.
I'll take questions if there are any.
All right, guys,
If
question
not,
time before we close
if
the session.
not, we can hit it right here and stop.
Yeah, I think that's enough for today.
All
I think
right.
that's enough. Questions, guys? All right, Quincy says gold has formed three significant touch points around 3,435, indicating strong resistance. Given the current fundamentals, and as I mentioned, weakening the dollar and upcoming Fed decision regarding the rate cut, we should expect a short-term retracement. Then if momentum holds, we could then see a bullish continuation towards that 3,800 level that Simon highlighted on the daily time frame. That's spot on, guys. The fundamentals are just lining up perfectly with the structure. What we need to wait for is the weaker data to income later on this week. So we'll look at the economic calendar. For those of us that are in the group, tomorrow we'll look at the economic calendar and plan around those events, merge it with our technical structure, Simon just outlaid, and try and engage with these opportunities according to specific entry criteria. Okay, I think that's it, guys. We all sorted? All right, guys. Please follow our page on Instagram. It's called The Daily Pulse. All right. Just so we can find a point of contact where we can all just be in one community. All right. If you guys want to keep up with some of the stuff that we post retrospectively, of course. We're not here to give investment advice. That is very, very important. We're not here to give investment advice, guys. This is for educational purposes and for you to also get in tune with the trading ideas that we are taking, guys. Because remember, we are first traders before anything, right? We trade as well. So this platform and this coming together is so that we can share these ideas and see if we can see some success in the markets together. Okay. The name of the page on Instagram is underscore the Daily Pulse. Okay. Underscore the Daily Pulse. It is one word. I'm going to leave the handle in the chat. Underscore
Yeah,
the
hit
Daily
them with
Pulse
the
on
link.
Instagram. All right. So yeah, guys, if you want to engage with us, you can find us on Instagram. And if you want to be a part of the real-time updates, where you get sort of like how can I put this? Where you get into intimate contact with us, and as far as being able to ask us real-time questions during the day, being privy to the real-time analysis, because this is a once a week stream generally that we do for everyone. But for those traders that are active and are really transacting on a daily basis, you need real-time updates, and that's what the Daily Pulse is for. We're there to just engage with one another, share these breaking news stories, share our trading ideas, and see if we can make sense of these confusing times in the markets, guys. There's a lot that's happening. So yeah, guys, to everybody that joins us on Instagram once a week, we will see you same time, same place next week. For everyone else in the group, we will see you in the group, and we will be having, I think, 2 more streams for the group privately, so we can execute on these trades. But again, guys, we're not here to give investment advice. We're not here to tell you which buttons to press. We're here to clear the noise. All right. We're here to give context to a market that you were already looking at. All right. Like, look at what we did with the dollar. Broke it down nicely. We can see we're poised for dollar weakness. We can see we're poised towards a path of lower interest rates. The structures are falling in line with that. What you do henceforth, guys, is up to you. Just remember, guys, always manage your risk accordingly, okay? Manage your risk accordingly. I think that's it, guys. I'll see you guys. Thank you for joining. Later.